In the real estate investor landlord space, for single family homes, the two most common policy contracts are a DP3 and a DP1. A DP3 is the more comprehensive policy contract. It includes replacement cost. It includes coverage for water damage. There's some other things as well. The DP1 is the more basic, more economic policy. It has claims that are settled on an actual cash value basis, and it doesn't include water damage, but you have the big ones. You have coverage for fire, you have coverage for wind, you have coverage for liability. So if you have somebody on their primary residence, would a DP1 be a good option for them? No, we want to make sure that we get them back to a pre-loss condition. They had, beautiful wood floors. We want to get them beautiful wood floors. We want to make sure that that's covered for water damage if there was a busted water pipe. But a real estate investor, especially ones that have a higher tolerance for risk and that maybe have 5, 10, 15, 20 homes, and can understand, okay, if I'm saving this much per property and I take this risk philosophy on my whole portfolio, then I can afford to pay out of pocket for some of these things because I like it because it's a quantifiable amount. We know, okay, how much roughly is depreciation going to be? If I had a water damage claim, how much is it going to cost me truly to get back to rental standard? If I have my property under property management, they're going to get somebody out there right away. Spoiler alert, I had a water situation. My tenant at one of my properties broke the faucet, I think, off of in the kitchen sink. I think they broke off the faucet and they couldn't find the water main, and it was like a whole thing, whatever. So we sent out the water dry out company. We ended up having to replace the kickboards at the bottom of around, we have tile in the house. But the point is, when I replaced the kick plates or whatever, we just did back up to rental standard. That was a few $1,000s of damage. I didn't even turn in an insurance claim because I wanted to pay the lowest rates for my insurance in the long run. And for me, it made sense to self-pay those things to save the money on the front end and for many years to come, rather than turning in a small claim and then pay for it, what would I feel like again and again. And that surprises a lot of people because I'm an insurance agent. I want you to have a lot of protection, but I want you to be super covered for the sudden and catastrophic big stuff. And I want our clients to pay as little in premiums as they can for having the coverage that they need, as long as they fully understand every exclusion, they fully understand when they have a claim, what they're giving up. In order for making that change, it can be a good option for some people. Absolutely not everybody. We have some clients that are like, nope, I just want to know it's going to be fine. When I have a claim, I just want to know that it's covered. I don't want to think about it. That savings isn't enough for me to give up that risk. Everybody has their own threshold of what they feel is enough savings. But if Kimberly's on the team, is Kimberly on there? Oh, good. Oh, I just thought you had to just put a shout out. Kimberly's been great with this. Great. I was just going to say, no, Kimberly's on the call right now. She was reshopping one of mine and I increased my deductible from $1,000 to $5,000. And the savings wasn't that much. I mean, I want to say it was only like $100 or something. And she was like, are you sure? And I was like, I'm sure, because I'm not putting a claim in for anything under that. And if I do that across all my properties, then it adds up. Everybody has a different threshold where they feel comfortable. For me, it's probably going to be a $40,000, $50,000, $80,000 claim before I turn something in. So why am I paying to have that lower deductible all the time? My philosophy. Not everybody is in that situation. So anyways.
Good explanation, right? So just kind of like weighing the pros and cons of, cash flow today versus cash flow tomorrow, essentially, right?
Right.
Something we talk a lot about.